May profits be upon you. Welcome back to another weekly Forex forecast. And we are going to jump right into it. And you know why? Because why not? Anyway, let's move on. Let's move to the US dollar index. All right, we're going to start with the monthly. We're going to do a top down real quick. All right. What I see is we have a break of structure to the upside. All right. That means we're bullish, period. That's very clear. All right. Price pulls back after breaching a old high, all right, and you expect that pullback, and then we go into some consolidation. This is where the good stuff is, all right. You see, I wrote this last week: signs of strength, because the U.S. dollar is showing some signs of strength. What happens is we make this swing low, break break the consolidation high here, all right, and you're saying, okay, good, we got a strong low, all right, then we pull back. It doesn't take out the low. That means this high is weak, because the only job of a high is to make a new low. The exact opposite works for lows. The only job of a low is to make a new high. When it fails to do that, it becomes the target of liquidity. Price moved up into that high, and over here we can see the formation of a order block. All right, we see the fair value gap that it created, and you say, oh, that is legit. Price not only filled the fair value gap, so we can do away with that. We filled the fair value gap, but we came up close to the extreme of the bearish order block. Pull back, didn't take out that previous low for the previous month. All right, and uh, you can see that price took out the low this month. All right, took out the low of last month, and then continued bullishly. We are on our way to taking out these highs. All right, that is my view. Okay, if we go to the weekly, we can see that there's that week high. You see how price made higher high, higher low, higher high, higher low. We haven't established the higher low yet, but it looks like we're well on the way to making it. Why? Because uh, you can see these consecutive bullish candles heading up to these highs. Okay, you can see that we've created a bullish fair value gap here as well along the way, after respecting the bullish fair value gap here. If we are respecting bullish PD arrays and disrespecting bearish ones, you know what the order flow is. It's that simple, right? So uh last week's candle did close just beyond the high of the previous week, and that is another bullish indicator, right? If we can go to the daily, what we can see, I got a little more detail here. What we can see is the pullback, how price came into the bullish fair value gap here, and then we started to move up, creating order blocks or areas of full value, right? For areas of fair value, excuse me. All right, you see this. I have the standard deviation. I put that bearish manipulation leg here, and one standard deviation is to these highs. I believe that's exactly where we're going to go. We'll always look for at least 2 to 2.5, right? That's what ICT teaches. After and we're going to see price has already gone past the zero, and we are on our way to the first standard deviation. Okay, and there is a bullish order block here that price traded back into, and then you see the strong bullish candle here, and there's another one to follow. We took the previous weekly high here with this candle. We took it last Friday, this past Friday, and you can expect a pullback of some kind. If we go to there's really, I don't really have a whole lot after that. I'm just saying that I'm just going to state that we are expecting bullish price action. All right, you can see there's a come on, man. All right, you just want to give me a hard time. All right, we got a bullish fair value gap here, so I'm looking for price to maybe come back and touch this tap into this bullish fair value gap and then continue higher. All right, because I believe that we're going to have a bullish week for the US dollar. We're going to move on. Let's go to the Euro USD if I can. All right, we're going to go to the Euros USD, and I'm just going to the daily. What I can see is lower low, lower high, lower low, lower high. All right, is this actually going to complete the mission? What did I say last week? I said this is a weak low here, and that because it didn't take out this high, because that high wasn't taken out, it becomes weak and becomes a target for liquidity, and we are on our way to taking it out. All right, look at these. Look how price is respecting bearish PD arrays. We have a fair value gap here, a bearish fair value gap here. Price traded back into it and respected it, rejected it, and it comes down lower. We push up into the order block it created. Price rejected again, 1, 2, that's Thursday and Friday candles. That's an order block there. All right. And price is being held under it so far. I believe that this low from the previous week was taken out, just like the previous weekly high was taken out with the US dollar. I mean, with the Dixie, the US dollar index. And you see the rejection there. We're going to have some kind of pullback, right? But I'm looking at this high. Oh my goodness. Let's just go to the doggone 4 hours so I can show you what I'm trying to do. All right. You can see that on the 4 hour, it gives a hint. You see that bearish fair value gap is blue. That's the wrong color. Sorry. All right. You can see that bearish fair value gap. I'm looking at price trade back towards it. I think we're going to hit that bearish fair value gap and then come on down and take out that swing low. We already took out the actual the major swing low. This is an intermediate. All right. But once we take that low out, we're on our way to taking out that low. That might not happen. This might not happen this week. It may happen next week. But it looks like we're well on our way to doing so. A bump here and then down. All right. Let's look at the British pound. All right. Let's go to the daily. British pound is a little more interesting because it's a little stronger than the euro, but still going the same way, right? I'll just go to the daily. All right. What I want you to do is to see the structure is similar to the euro, except it's set up a little higher. What happens is, you see this? Wow. You see this high? It didn't take out this high. What does that mean? It's weak, right? This low is weak because it didn't take out the new high. So what does it become? A target for liquidity. That's all. It's as simple as that. All right. That's the nature of lower low, lower high, lower low, lower high. All right. All of these lows are weak in a downtrend because they don't create new highs. They don't take out the old high. All right. When it does, that's a break of structure, right? And when price pulls back, you expect this low to be protected because it's strong. It created a new high. All right. And that's where you look for that OTE pullback. Look for it around the 62 to 7708, Fibonacci pull, retracement levels, right? So I'm sorry to get off course there. So, but you see this swing high here going through this fair value gap. All right, prices at this fair value gap right now. Normally, I would say, yeah, I'm bullish until proven otherwise. Well, this one is already showing signs of weakness. Let me show you what I'm talking about. Go to the 4 hour. You'll see. Again, remember, we're looking at I'm looking at a bullish Dixie this week, the US dollar index. And you can see we've made lower lows. This one actually took out that high, right? technically, but we didn't trade through it. This is just a liquidity sweep. If it doesn't trade through and close above an old high, it's just a liquidity sweep, just a rating of buy side's liquidity. And then it shows its true colors once it takes out that low and makes a lower high. And then we make a lower low. All right. So we have what we need here for to think bearishly. All right. And this is where that order block begins, the area of fair value. All right. Price push, traded through it. And I expect price to come back to it, to, to retest it, and then continue bearishly. That's what I expect. Okay. It's not going to be, 1, 2, zing, bam, boom. It's going to take some time, but you want to wait. You want to wait. I wouldn't want to take buys into a fair value, an area of fair value. I wouldn't want to take buys into that. I will wait here until I see price turning over. Give me the signature for shorts. That's what I would wait. That's what I would do. All right. Let's move to the next one, and that would be the Aussie dollar. I'm going to tell you straight up, I don't like I don't like the Aussie dollar. All right, you see that big "don't do it" don't do it sign. All right, that's because look at it. Look at this. Just avoid this. This is chop. All right, that's chop. That's the kind of consolidation that says don't do it. There's other markets to trade. Okay. You want to wait until price either takes out this, trades through the top or the bottom of these kind of consolidations. All right. You want to see a break and a close below that low or above this high. All right. Then wait for the pullback, and then you can take it low, or take it high, or take it low. You wait for the pullback, boom, and then that's it. Don't mess around with that. Don't mess around with the Aussie dollar. Wait until it gets out of the middle. It's in the middle of this mess. Wait until it gets out of that middle. That's all I'm telling you. All right. The next one, New Zealand dollar, just a hair better. Just a hair better. I'm not saying it's the best thing going. All right. Why? It's closer to pound, right? You can see that we had a bullish break of structure here. All right. And then price equals the highs. All right, just does a liquidity grab, doesn't trade through that high. Nope, no close above, none of that. No. And then it shoots down, fails to make a new high, and then continues down. All right, that's not good. That's bearish. All right, and it created. I got to stop this. It created bearish fair value gaps along the way. All right. Price traded back into that bearish fair value gap and rejected nicely. Okay. That was Thursday's candle right here. And then Friday's candle ended up very indecisive doji, right? All right. But price did trade back into that order block here. You can see uh, uh, the beginnings of an order block. You see the up close candle and then the down close candle. All right, it traded back up into that, became a doji. We don't see the follow through. I'm waiting for the follow through. This isn't the first market I would look to make my trades for. All right, I'm looking for price to come and sweep this low. It took out this low. I'm looking for these lows to get taken. This is low resistance liquidity. All right. This won't take a whole lot. And there's a lot of liquidity to get. And once we get past here and we're into this bullish fair value gap, I want to see how price reacts. I want to see how price reacts. Are we going to go through? Because that's a pretty nice size, but well tested bullish fair value gap here. Let me just draw it out for you. That took a while. All right. You can see that. Right? But it's well tested, and price should, if price does come in there, I'm expecting it to fail. So we'll see. All right. We'll see what the next candle print will be. On the next one, this is the Canadian dollar. All right. Now, this is the Canadian dollar futures, right? This is actually CAD USD. This is not USD CAD. It's actually the opposite. I'm going to do both for you though, so nobody gets confused. Right now, for the CAD futures, what am I looking at? All right, the important part. Let's go to the monthly. Let's take a quick look at the monthly. You can see all this consolidation. Wow, what is that? All this consolidation. This isn't the stuff you want to be looking at. All right, you want to see that there's low here, low here. We have relative equal lows. Price could come down here, and there's a lot of liquidity as a draw, and come and get this liquidity. And uh, you know, it may take a month or two, but uh, this is the draw for sure. All right, we did not make a new high here. We come down into the order block, way into the order block. This order block is about to fail. It's coming down. All right. If we go to the weekly, I don't think we get much more insight there. No, we don't. But this isn't the kind of price action you want to be messing around in. You don't know where this is going. You see those wicks and that ugly. It's ugly. All right. Price does come down to the to close to the swing low, pulls back, a sharp turn towards that swing low. We pull back again into this order block. All right. This candle completely engulfs the previous candle. All right. We have a pullback into it, and you see that little dotted line I have there that I'm looking for price quite possibly to touch that and then come back down or start moving down from the opening candle when it comes here. I'm looking for price to maybe take out this high, to maybe take out that high. Boom. Yeah. Maybe we take out the high and then come down. I'm looking for this to be the draw on liquidity. All right. If we go to the daily, you see my little note there. I'm saying wait and see because this isn't welcoming price action. Uh, Price did come down, take out the swing low here, the intermediate swing low, took out another. All of this low hanging fruit here, a lot of liquidity, pulled up, and we're coming back for that swing low, in my opinion. All right, price could continue up higher, but I'm looking for a strong US dollar, and it tends to outperform the CAD. But I would say wait and see. Look for another print. We're going to see how it reacts to this order block up here, right where it's at right now. We're looking for a print that takes out the low of this previous candle from Friday's candle. Okay. And if we have any sense of anything, we'll look at the 4 hour, a sense of where it may go. There is a fair value gap that was created after it took out the swing high. So I'm looking for price to come push into that fair value gap and then turn around. All right. I think that's a reasonable expectation. All right. Let's see the US dollar Swiss. This one I really like because of what it formed. I want you to get this. I want you to get this. This looks as if what we have here is a down move, a push higher, and then we're coming down. If price completes to take this low, it trades through that low. I'm looking for the pullback because that's going to be a high probability trade to the downside. That is a breaker, folks, a breaker block. And if price comes back into this breaker block, which already left the fair value gap, I'm looking to take it down to Chinatown. This is my draw on liquidity, the swing low. All right, that's my initial draw. And if price pulls back, I'm looking to come back into this trade and take it down to the lows. That's it. I hope you got something good out of this, and I appreciate you watching my video. Check out the videos that I'm leaving on your screen now, uh, uh, going over the indices and all. And I will see you in the next video. May profits be upon you.